Good morning, afternoon, evening, wherever you're joining from, everyone. Welcome to the B2B Pricing Pulse, a unique event where we explore the intricate world of B2B pricing for 2024 and beyond. I'm Dan Balcauski, your host for today's experience, the founder and chief pricing officer of Product Tranquility, and the SaaS Scaling Secrets podcast host. I'm thrilled you could join us for what promises to be an enlightening session. Before we dive in, I'd love to know where everyone is tuning in from. Please go ahead, familiarize yourself with the comments section here in the StreamYard overview and drop your location in the chat. I love seeing a diverse range of places our audience come from. It's always fascinating. I'm joining you today from warm but slightly rainy Austin, Texas. Stephen, you're up in Vancouver. Hopefully you're not all rainy and cold quite yet, although it almost is ski season, so hopefully get advantage of that. Massachusetts, Mumbai, good evening. Thank you for joining us so late in your day. Philadelphia, City of Brotherly Love, Paris. Bonjour. Welcome, mon ami. All right. We love it. Great. As you guys continue to share your locations, I would like to take this opportunity to introduce our esteemed panelists. Some of the best minds in the world of B2B pricing we brought together for you today. They're here to share their invaluable insights and help us navigate the complexities of this sometimes dark art that is B2B pricing. First up, we have Stephen Forth, CEO of Ibica, joining us from Vancouver, British Columbia. Stephen is a pricing pioneer in the B2B SaaS and industrial Internet of Things space. He's a proponent of model-driven pricing and has recently been fascinated by AI-powered pricing innovations. Besides his professional achievements, Stephen manages a massive 320,000 member design thinking group on LinkedIn. His philosophy is that it is more important to design pricing than to set prices. A good price design is adaptive, tracks value, and is fair to all parties. You can dive deeper into Stephen's insights on his blog at Ibica's website or listen to his thoughts on recent webinars and podcasts. Links you can find in our webinar chat. Hello, Stephen. Welcome to the B2B Pricing Pulse.
I'm pumped to be here and looking forward to the conversation. Thank you.
We are excited to have you. Next, we welcome Rob Litterst, a pricing strategist and writer based in Boston. Rob is the brain behind the newsletter strategy at HubSpot and writes the weekly newsletter Good, Better, Best, focusing on SaaS pricing strategy. He's also the co-founder of Pricing SaaS, a research platform aiding SaaS startups in market-winning pricing strategies. Rob believes pricing is where product meets strategy. Explore Rob's work further on pricingsas.com and on his newsletter on Substack, goodbetterbest.substack.com. Hello, Rob. Welcome to the B2B Pricing Pulse.
Thanks for having us, Dan. I'm pumped to have this conversation with everybody.
I couldn't be more excited to have you join. Joining us from the heart of Silicon Valley is Alex David, the co-founder of Corely, a growth monetization platform for SaaS companies. With a master's in pricing theory and a rich career that includes a stint at pricing consultancy Simon-Kucher Partners and leading the pricing function at Segment, Alex's pricing expertise is formidable. He's passionate about the role of monetization in business growth and believes the most costly pricing mistake is inaction. You can connect with Alex on LinkedIn, follow his thoughts on Twitter, or learn more about Corely at their website. Alex, welcome to the show. How are you doing today?
Doing great, Dan. Thanks for having me. Looking forward to it.
Very excited. Last, but by no means least, is panelist Karan Sood, who joins us from Toronto. He brings 15 years of diverse pricing experience across multiple industries, currently leading sales operations for Rakuten and Kobo. Karan handles everything from pricing lifecycle to marketing operations. He advocates for integrating pricing into the core of business strategy, impacting all organizational teams. Karan's guiding principle is that pricing is the heart of your business. If you haven't been following Karan's pricing wisdom on LinkedIn, go do yourself a favor and follow him on LinkedIn directly after this webinar. Welcome, Karan.
Thanks, Dan. Very happy to be here and honored to be in such great company.
Excellent, excellent. Well, we have maybe a little bit of delay on your end, Karan, but we're gonna proceed anyway, and hopefully the glitches work their way out of the internets. So thank you to each of our panelists for joining us today. But hold on, this isn't your standard run-of-the-mill webinar. We're shaking things up with a little game show twist. That's right. Our panelists are not just experts today; they're also our contestants. Yay! Hold on, wait. Let's see. Can we do this? Never mind. Oh, there we go. There we go. And guess what? You, our beloved audience, play a crucial role too. Feel free to cheer for your favorite panelist in the comments. Get involved, ask questions, and who knows, if I see a question in the comments that's just too intriguing to pass up, I might throw it in as a bonus challenge for our contestants. To kick things off, we'll start with a quick icebreaker game called The Price is Moderately Accurate. Just to make sure we stay on the right side of legal. This game will determine who goes first in our main event. So here's how The Price is Moderately Accurate works. I'll describe a product. Our panelists will then guess its price. You can't give the same answer as another contestant. The closest guess without going over wins. The winner of The Price is Moderately Accurate will go first in our main game. Simple, right? Let's see how our experts fare in this challenge. Contestants will guess in the order I introduced them, which also happens to be in the order farthest away to closest to me here in Austin. That means Stephen first, then Rob, then Alex, and then Karan. Please, no cheating, no talking amongst yourselves, and as always, no wagering. So let's play The Price is Moderately Accurate. Hold on. There we go. All right. So our item for today is from Descript, a fantastic tool I love and likely will be using to edit the recording of today's webinar. Descript is an all-in-one audio and video editing tool that's incredibly intuitive and powerful. It's used by podcasters, video creators, and professionals who must transcribe, edit, and produce media content quickly and efficiently. Descript offers 4 different pricing tiers: a free tier, a creator tier, a pro tier, and an enterprise tier. Just so you know, their pricing across all tiers is per user per month. Now, here's your challenge, contestants. Guess the price for 1 user per month for Descript's Pro plan, assuming annual pricing in US dollars. Remember, the closest guess without going over will get to pick the first category in our main event, and you can't give the same answer as another contestant. Steven, you are up first.
$197 US dollars.
$197. Okay, Rob, what is your guess?
I'm going to go lower. I'm going to say 89 US dollars.
89 US dollars. Okay, Alex?
Yeah, Rob, you're in the same ballpark as me. I'm going with 79.
$79. All right, Karan.
I'm gonna go higher. Feels like the pro plans. I'm gonna go somewhere around 348 for the year.
For 1 month. We're looking for 1 month.
Oh, 1 month? I thought you said
Yes.
for the year.
For 1 month.
Oh,
Do you want to take your number and just divide it by 12?
I think we all gave per year prices.
Yeah, it's $29 a month.
No?
I was thinking per month.
No? Okay.
Yeah.
So do you want to take your 197 and just divide that by 12?
Yeah, for the pro, but if for a month, I factored in an annual discount. So say 39.
Well, it's per month, but for the annual plan.
Okay, so the annual plan per month. Sure, let's just take my number and divide it by 12. It's moderately accurate anyway. We don't need to.
All right. Rob, Alex, did you have the same mistake? Did you give it so 89 per month, 79 per month? And Karan, I'm sorry, your internet had cut out. I didn't get your answer. Karan, are you there? Can you maybe, if you can't hear me, maybe just type it in the chat?
Yeah, $29 for me. $29.
$29. 29. All right. Well, the answer is $24.
Wow.
So everyone went over except for Steven at 16 USD per month on an annual plan. So Steven, you're our big winner of our game here.
You throw enough darts and some of them will hit the dartboard.
There you go. I will mention Descript is not a sponsor of the show. I am only a avid fan of but if the CEO wants to come on my podcast, I am more than happy to have him on. So we'll see how that works. Great job, everyone. And congratulations to Stephen Forth, the winner of our intro game. Now it's time for the main event, the B2B Pricing Pulse game. So this is our game board. Behind each category on our game board, each inspired by a movie title, lies a related question representing a facet of B2B pricing. Today's categories are Risky Business, The Sixth Sense, Mission Impossible, Changing Lanes, Moneyball, Clash of the Titans, Ex Machina, War of the Worlds, The Big Short. I was trying to get Potent Potables in there, but it didn't quite fit. Here's how we'll play. So, Stephen, you'll go first. You'll kick things off by selecting the first category and answering the corresponding question. And then Rob, Alex, and Karan will follow in that order with their insights on that same question. And then for the next topic, Rob will go first, answer first, followed by Alex, Karan, and Stephen, and so on. That way, everyone gets a chance to lead off the discussion. Contestants, we love useful, tactical, pragmatic answers, but let's keep our initial responses under 2 minutes to keep the game moving. I encourage fiery debate. That means you can rebut another person if that person calls out your particular argument. And just a friendly reminder, I have the ultimate power here. If anyone goes on too long, I might have to use my power to mute mics or in a more dramatic twist, cue the orchestra music. Don't worry, it's all in good fun. Audience, feel free to chime in with your thoughts and questions. Again, if I see a question that is particularly interesting or engaging, I may just throw it in to the mix as a surprise for our contestants. Root for your favorite answer or your favorite contestant in the comments. And as always, no wagering. Contestants, any questions before we begin?
Let's go.
All right. We'll take the Price is Moderately Accurate off. Stephen, which category would you like to tackle first?
I rewatched Moneyball on the weekend, so let's go with Moneyball.
Okay, Moneyball. Stephen, you're the head of growth at a company with a B2B product. The CEO grew up at one of those mega consumer tech companies and is a big believer in the power of A/B testing and is pushing you to just go test pricing. How would you approach the idea of A/B testing pricing in a B2B context? What are the potential benefits and pitfalls?
Okay, so I'd start by saying it's highly risky to directly A/B test price. But what you can do is A/B test value. See which value drivers are getting the best response. You can see which value drivers resonate with different market segments, and you can use value as insight to drive your pricing. I also think that one of the mistakes people make with good, better, best pricing is they don't rebalance their the three categories, or the good, better, and best. And one of the ways that you do that is through your fences or limitations on each. And I think those you can A/B test quite effectively. So I would say we're not going to A/B test price directly, but we are going to A/B test on value, and we are going to A/B test on fences.
I like that a lot, Stephen. I agree quite a bit with what Stephen said. I think specifically there are a few things that I feel a lot more comfortable A/B testing. Like I think if you have a freemium plan, like if you're a PLG SaaS company and cut from kind of like the modern cloth and have a freemium plan, I think you can kind of feel free to experiment there because the stakes are so low. Agree with Stephen on A/B testing copy, positioning, some of these things that are kind of surrounding pricing. I would probably hold off on A/B testing actual price points just because of the negative optics that can happen if customers find out that they got it at a different price point than somebody else or something like that. But generally agree with what you said there, Stephen.
Excellent. Well, Alex.
I'll hop in here as the guy who co-founded a price experimentation company. So it's interesting though, because we're positioning this as a B2B question, which primarily in my mind, B2B means sales. And in a sales world, you are always testing prices because no price is ever going to be the same between customers, assuming discounting and et cetera, et cetera. But what you can do is you can actually give different sales teams different price lists to operate off of and thus compare and contrast and test. Because there is a lot more flexibility and nuance in being able to manage that and massage that at the actual customer base. And in a B2B world, you're constantly price discriminating based on the individual use case anyway. Now, if you're going to do that type of thing, you obviously want to be making sure that the comp structure you set in place is fair for the sales teams so that you're not disincentivizing or incentivizing weird behavior amongst them. But if you are talking about a PLG motion where there is public pricing, I'm a big fan of price testing. Works really well. And if you control the variables correctly, our customers at least see really great impact from it. So I would argue that it's not as risky as a lot of people think.
Ooh, spicy take there from our pricing monetization platform. Karan, what are your thoughts?
So any testing and research is better than no testing and research. So I think there's value in A/B testing, but I think there's a lot of pitfalls that you have to be very mindful of when you're A/B testing. Because like when you're A/B testing, you want to make sure that your groups of people that you're testing or the customers that you're testing are homogeneous enough that it actually makes sense. A lot of time people, just randomly A/B test, but the control group and they're just very different. So you end up with very different insights. So you got to be very mindful of when you do that A/B test as to what exactly is the makeup of that group of customers, and is that similar enough that you will be able to get that insight out of it. And I think also A/B testing at the low end of price points at easier to value products, like the products that are valued at $0 to like $20, and they're quicker. You can get to value quicker. They're easier to A/B test, but as you go up in the scale, it's very hard to A/B test higher price points and higher where the value messaging is a lot broader and ROI is a lot complicated. I think so. It really works well at the low end, but you still have to be very careful about what you're A/B testing and how you're A/B testing it. So that's my 2 cents there.
Well, Stephen, I saw a little smile grow across your face when Alex was making his points. Was there anything that you wanted to add after those initial comments?
I think I put them mostly in chat, but yeah, to me, it's really important that pricing be fair and transparent. And I think that I don't know if that's behind one of these squares or not, but conversation on pricing fairness and pricing transparency, I think could be really interesting. And a while ago, I actually did a fireside chat like this, where we had a really good conversation about what it means for pricing to be transparent. But transparency and A/B testing of direct price levels, I think, can clash. So different philosophies, different approaches work. And I would love to find a way to A/B test prices that I thought I could trust and believe in and stand behind. So I'll go over and look at Corley, and maybe I can get Corley to A/B test Ibica's prices.
Excellent. Any other comments on that from the rest of the group? All right. Well, we will go on to the next category. Rob, you are up. Which
Awesome.
of our categories do you want to select?
Why don't we do The Big Short?
The
Big fan of that movie.
The Big Short. All right. The last several years have seen historic inflation, causing rising prices across many B2C categories and shrinkflation to enter the cultural lexicon. Given the recent historic inflation and its impact on B2C categories, how should B2B leaders approach increasing prices for 2024? Is there room to absorb price increases, or is there an outsized risk of a customer backlash?
Yeah, I think this is really dependent on the product, and I don't want to give like a cheap answer, but I think it's kind of dependent on the product and kind of where they stand among customers, and to kind of use like inflationary terms. I think they're kind of similar like SaaS staples and then SaaS discretionary products. And I think the staples are always going to have pricing power when you think about like CRMs and like somebody like Zoom or Slack or one of these really integral platforms that are a huge part of your business that your team is using every day. Obviously, like AWS would fall into that category. And then I think like SaaS discretionary, there are a lot of tools out there that might not necessarily be like mission critical for day-to-day work or could have easier alternatives that could be cheaper. I think of like, no offense, but like companies like Miro or like Notion or something like that, depending on how teams are using them. I would think that they would potentially run into some problems if they tried to raise prices too much. I think both of those companies keep their prices relatively low, probably because they know where they sit in the market. But that would be my feedback.
Excellent. Alex, what are your thoughts?
I'll come in maybe with another hot take, which is that I don't know if inflation matters. I think that generally speaking, as a SaaS company, you're always trying to be growing and adding value. And so your product should be continuously evolving and adding new functionality and creating new use cases, et cetera. And if you're adding more value, you should be extracting that value, which means you should be charging. So, inflationary environment or not, I think that mostly changes the size of that increase and how much people will accept that increase. But if the question is, should someone be raising their price? The answer should be yes, assuming that they're growing and making their product better over time. Now, I think to Rob's point, certain companies can get away with more depending on how much they did, how vital they are, how sticky is your product versus what are the switching costs, yada, 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 right? All of those kind of retention questions you have to ask, and how will that impact churn? But I do think that like you should always be looking to increase your price if you're growing your product value.
We love hot takes here. Throw all the hot takes you want. Love that. Karan, what are your thoughts on this topic?
I think a lot depends upon B2B, B2C and consumer products got away with a lot of inflation cost increase over the years. But I think B2B, a lot depends on your stickiness of your product and how entrenched that product is in your customer's workflow. If you have something that's so entrenched that replacing you is going to be a bigger hurdle and a bigger cost to them, then you can get away with price increase very easily. But and this because there's a certain level of loss aversion as well as to, hey, what I'm going to lose here. But I think you got to be very mindful of the timing and how much of that price increase is, because FP&A folks right now are looking at SaaS tools like a hawk. They're looking at it day in, day out and saying, what's delivering ROI, what's not delivering ROI, what needs to be cut and what. So if you are going to plan a price increase, if you're going to change something, get on those conversations now. Because if you're going to wait till early next year when the budgets have all been finalized and everything has been done, it's going to get extremely difficult to go back and ask for price increases. So I think a lot depends upon how sticky your product is and how entrenched it is. And you really need meaningful differentiation if you're adding and to be able to pass on the price increases. So if you're in a very competitive sector of B2B tools, like maybe scheduling or video cutting or what, so on and so forth, then it's going to be tough for you out there. But if you're more differentiated, then I think you'll have a better chance of pricing. And I think you should absolutely do those price increases, even if they're meaningfully smaller than, prior years.
So I'm hearing a lot of common. It depends on how unique you are in your market, your competitive differentiation, in the market itself, and the stickiness of your product. Steven, what are your thoughts on this particular matter? Do people have room to raise prices in 2024?
So there was a lot of talk about SaaSflation earlier this year, especially among those that emerging category of SaaS procurement software companies, which promoted the idea that SaaS companies were taking advantage of people and just jacking up prices. And I think we have to be aware of that meme and deflate it. And the way that we do that, I think, is, first of all, justifying SaaS price increases because of general inflation was a really dumb thing that some consultants, I won't mention, pushed on investors, and it cascaded down through the SaaS business. And I think it hurt us. It hurt all of us. I really agree that if you're providing increased value, then it makes sense to increase your price. And one of the SaaSflation memes was that digital editing tools, the prices increased 180% over the last 5 years. Yeah, but 5 years ago, those were very primitive tools, and the value has increased far more than 180%. So those price increases are perfectly justified. The thing I think we have to be careful about is peanut butter spreading. So not all of our customers are the same. So if we have a set of customers that we are delivering little value to, but we're extracting a good price, we should not be increasing prices there. If we have a set of customers that we're creating huge value to and we're extracting very little in price, absolutely we should be increasing prices there. And there are some people in the sort of bottom left quadrant that we don't create value for, and that we don't create a lot of, and we're not getting a lot of price capture. increase prices there and let them churn out. You should not be afraid of increasing prices and losing some customers that are not getting value.
I hear a lot of it depends on your product, it depends on the particular customer, and depends a lot on the value you're delivering. From this group, any other further thoughts on appetite for increasing prices as we go into next year, now that everyone has had a chance to give their initial thoughts?
I think what Karan said is important is you can't surprise people with price increases. So you have to give them context where you say, this is why the price is increasing. This is how we determine the price increase. This is why it's commensurate with value. And, give them opt-out, maybe have a package with reduced value at the old price. There's things you can do to make the price increase acceptable and palatable. Just showing up one morning with a higher price and not giving any justification or warning, that's never a good idea.
Give a justification, but inflation is not a good justification. I think it's
Not-
one of my takeaways.
Not for B2B SaaS, I don't think.
Fair enough. Any other comments from anyone else on the panel before we move on to the next category?
Yeah, I might just throw in that we are in a world now
I
of costs and profitability being significantly more critical. And I think that I say that as SaaS companies, I think there are plenty, we're seeing some people in the chat that are from very different industries where profitability has always mattered. So I'll keep that in mind. But I think, especially in SaaS, where we're seeing profitability become much more front and center now, you can't just let your prices sit there. And so I think that a lot of people are starting to be more focused on how do we think about our pricing? How do we think about the increasing of that and leveraging that to become more profitable? And I think that's just part of the equation that you have to now be considering constantly versus like, oh, let's think about a price change every 5 years. That's just not going to cut it anymore.
The end of 0% interest rates is over. Is that the
So I've been told.
Yeah, it's not just that. It's also the cost dynamics are changing as people introduce AI and generative AI based solutions. The cost dynamics are really quite different, and we have to include cost into our value models and our pricing models.
Excellent. Well, I think we have beat that particular topic to death. We will go on to back to the game board here, and let's see. So, Rob, I believe you the one who chose The Big Short, correct? So, Alex, you're up next.
Given that we were just talking about AI and it feels very much with the zeitgeist, let's go Ex Machina.
Ooh, Ex Machina, one of my favorite movies, by the way. Really
Same
well
here.
done. And I, for one, welcome our new robot overlords. We stand at the peak of artificial intelligence, otherwise known as AI hype cycle, entering a year that promises even faster technological advancements. AI's role in shaping product roadmaps and business operations is becoming increasingly significant. Considering this, what impact do you foresee AI having on pricing strategies as we plan for 2024?
So we're actually like actively building AI pricing solutions. So it's kind of an interesting question. But I think the biggest thing that you'll find is, and several of us have alluded to this already, like when you're doing pricing, not everyone should have the same price. You want to do some form of segmentation by value. Different groups of people get different prices based on the value that they receive, blah, blah, blah. The thing with segmentation is that you need a lot of data to be able to do that type of segmentation and align prices to those customer bases. That gets harder and harder the more narrow you want to go, because it just gets really hard to get that kind of level of insight and data. AI makes that much more palatable, and you get into this world of being able to do microscopic segmentation or personalized pricing. Not that we're necessarily going to evolve everything into dynamic pricing, but you do get into a world where you can get much more personalized with your offering and get much better from an analytical standpoint on generating an offer that aligns with a specific person's value. And I think that's where we'll probably see the most ubiquitous use of it, because there's no reason everyone shouldn't be able to use that to better assess product valuation, product usage, all the different marketing events that people do, and leveraging all of that to create highly specific profiles that they tie their prices to. So I think that would be probably the most common way I would expect it to impact things from a pricing standpoint. but that will be also highly dependent on industry, product, geography, and where data is available.
Interesting. Karan?
Yeah, so I'll break that question sort of into two parts of how it will impact pricing, because that question comes up quite often. I think there's creating pricing, and then there's and then using AI for pricing. I think using AI for pricing, I think that's been around for a long time. I mean, like, Stephen probably knows more about it, and you should probably write a book on it. As is that, for example, airlines and yield management and all this, like, they all had machine learning and AI forever. But I think what's going to happen in the next couple of years, I think it'll help us create better pricing, because it's going to get more common. I think tools like Microsoft Copilot may even bring functionality that we probably didn't have before into Excel and make it easier to use and create algorithms and creating sort of newer models. I think so it's going to help us there from price setting point of view. But then there's the other element of it, is like pricing AI, which is a totally different ballgame. And I think we haven't scratched the surface of how to price AI yet. I think it's very cost-based right now. People know, hey, it's going to cost me, 0.15 cent a token or whatever, and I'm going to sell it at this price. And I think they're making the profit in the middle. But I think over time, we're going to see that AI tools will need to be priced very differently. They'll need to be priced based upon maybe they're a platform based, or maybe they're extension or something. But I think over time it will be very outcome based, and I think I'm a big supporter of that with AI. That AI will help us deliver outcomes better, and then that outcome will be priced differently than where we are right now. I think the whole usage is a way to get to that outcome. And I think AI will help us in that outcome-based pricing. And I think that's where it's going to go, but not now, maybe in a couple of years, but that's where it'll be headed. But I think for now, we should just try and use whatever tools we have that AI is giving us for better pricing, and try. And one thing for sure that I would say is there's a lot of everything in AI right now is priced around that $20 to $30 price point, which seems very weird, because we have the biggest technology that we have since sliced bread, maybe, and we are pricing it at the low end of what willingness to pay. So I think a lot will need to change, and people need to look at more creative pricing strategies with AI in the next little while. So
Got it. And your video is breaking up a little bit, Kurt. I heard a couple of really important distinctions there, which was a distinction between, in many B2B pricing markets, maybe they've been using machine learning. For example, the Zillions and the Pros, et cetera, have been using AI of a different nature for a long time in that domain. And then also there's this distinction between how do you price sort of these generative AI tools versus using the pricing strategies sort of internal. So I think those are some really good distinctions that I heard there. Stephen.
Yeah. So first, I think Karan is right on point when he says that AI is going to enable outcomes-based pricing, but not, for most of us, not next year. That's the sort of 3 to 5 year old path that we're on. OpenView, in its latest State of SaaS survey, said that 70% of B2B SaaS companies are making investment in AI-enabled products, but only 15% have monetization strategies. So if that's true, and I have no reason to doubt it, that's a big problem that we need to start solving in 2024. So we're going to have to come up with ways to monetize our investments in AI, because these are big investments. And Ibica has a survey on AI monetization in 2024 that's coming out in December. And it's interesting to see the different strategies that people are taking. So one thing I think we really need to look at is, are these new AI capabilities, are they going to be extensions to our current products? Are they going to be new products? Are they going to be layered into our current GBB architecture? How exactly are we going to handle the packaging questions? And the most compelling answers I'm seeing are in a few companies that are actually rebuilding where the AI is the platform on which the other products sit. So that there's been an inversion in platform architectures among a few companies. Now, I can only think of probably 10 companies right now that are doing this, But I think that's going to be the general trend over the next 3 years, that the AI will be the platform. Shorter term, I think what AIs are going to do is they'll allow us to integrate a lot more data into our pricing decisions. So as a concrete example, we're working right now with a large company in Europe on its price change requests. And when you consider, should I make a price change, there's lots of information that you could consider, but trying to get all of that out of structured databases and all the different places information is scattered within organizations can be really difficult. So we are customizing a version of Llama, which is Meta's open source large language model, so that it can do a good job of answering questions that you need to give you context for making a price change. And so I think some of those, that sort of approach, I think, is going to become quite common in 2024. I'm a huge fan of Hugging Face. For those of you who don't know Hugging Face, I'll drop a link in, but it's an incredibly good place to go to find large language models that may be really relevant for the pricing challenges you're trying to solve. And I'll drop a link in to a Van Westendorp survey that Ibica did on pricing of things like Copilot, because we got some interesting results on that.
Excellent. And Rob.
Yeah, so I agree with a lot of what these guys said. Alex's point around just being able to do a lot more dynamic pricing, I think, is super interesting. And I think he's probably much closer to it than I am, but the infrastructure side of things is probably going to have to change from like a billing and management standpoint to align with that. But definitely think he's on track there. Totally agree with Karan and Stephen on outcome-based pricing. And Craig, I noticed your question in here. Whenever I think about outcome-based pricing, I think about profit wells retained, because I used to work there. So their whole goal would be to go after delinquent churn and help you recover some of those customers. And they would charge on a percentage of the revenue that they recovered for you. So that's one example, I think. I do think outcome-based pricing is going to become more popular through AI. I also think it's going to allow smaller teams to build really powerful products, because I think AI is going to help handle a lot of the heavy lifting with code. And I think that kind of a trend in outcome-based prices, I mean, when you think about how much the market's going to get saturated, I mean, I think the bigger downstream implication is that prices are probably going to come down. I also think that like every time something sways super far on one side of the pendulum, it tends to come back at some point. So I think people are going to over-index for using too much AI, and eventually there's going to be novelty in having like an actual human help you learn a product. And I think people are going to be able to charge a lot more for human support and like really high touch hand-holding support. So those are a few ways I could see it working out.
Great. Well, there is a question that Alonzo has thrown into the mix, and this, I guess, it sort of intersects the AI question with a little bit of the Moneyball question from earlier. He said, "What about all these customers who are comparing all price lists and have lots of questions about price changes, whether increases or decreases? Like, how do you deal with these situations? It's like, hey, you got a poor customer success renewal rep being like, oh, your price changed this year, but why did it? The AI did it. Is that what is a strategy that companies can use if that they're going to adopt this more sort of dynamic? The AI told us what the right price was going to be."
Yeah. So at a professional pricing society conference about a year ago, one of the big old-fashioned heavy metal pricing companies was up on stage saying that all pricing is going to be dynamic in the future. And I said, great. So does that mean that you set your prices with dynamic pricing? And of course they don't. And so having a black box AI set a price for you, I think, is a really bad idea. You have to be able to explain why you made it, how you set prices, why you made a price change, and why that price change is in everybody's interest, that it's a positive sum game. And the way you do that is through value, being transparent about how you set prices, having conversations on value, and then you can justify your pricing. But if you set pricing through a black box AI, I don't think anyone in B2B SaaS does that, though. but certainly some distributors do. And if you set prices by throwing darts at the board, or we're going to throw it at the wall and see what sticks, then you're in trouble. You can't justify your price changes. And Alonzo's, or the customers, they have a good question that it can be hard to answer.
Anybody else want to chime in on that?
Yeah, I think there's like where I see the value of AI when it comes to pricing is on all of the things around and what indirectly or inform the price. So if you think of all the tasks you have to go through to understand, so like going back to the segmentation aspect, like understanding the patterns that bring unique segments together, right? Like right now, if you want to do that, you have to figure out what are the factors, doing some form of a factor analysis. Then you run a k-means cluster to factor those customers together into groups of similar customers and blah, 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 blah. And there's a lot of manual type of statistical math you have to do. That type of pattern recognition AI does really well. So you can do that much better, much more granular, much quicker. But you can also look at the side of, you could train AI to represent customers and get into conversations with AI to ask them about their willingness to pay, which you wouldn't be able to do directly to customers, right? So that would be a way to inform or get data from a customer without talking to a customer in a much more rapid fashion. You can have AI design surveys for you, go through and conduct, we have voice AIs that can go and do customer interviews for you and do 1,000 of them in an hour, right? There are so many ways that you can use AI to inform, collect data, and empower your pricing without the AI exactly setting the price. But there's all these things, especially for small companies, right? Like most of the time you contract those things out because you don't have the teams to do it. And that is really expensive. And most small companies can't do it. So they're stuck with doing minimal data analysis with the data that they have, or throwing something against a wall and hoping it sticks. But I think this is where AI becomes a democratizing force in being able to empower companies of all sizes to get this type of data to make much smarter pricing decisions. And that's what I'm really excited for. Totally agree, Stephen. I'm not a huge black box fan of like, just give ChatGPT, what should I charge for my product? That I don't think is the answer. But leveraging AI to inform all of these different sources of data on your pricing, that I think is really exciting.
Oh my God. I spent all my time thinking about pricing, and I haven't heard that. That is an amazing answer. I think Stephen also said in the comments, that's a really cool idea. Taking all that work that you have to do, the statistical analysis, et cetera, that informs the humans at the end of the day, making a rational decision, and all the justifications that Stephen was talking about, taking all that workload and having AI do some of that. Those are really interesting ideas. Anyone else want to chime in on that topic before we move on to the next one?
Yeah, what I wanted to say was that we perceive price changes and these price discussions to be very one-dimensional. That here's the buyer and here's the seller, and they're both talking and they're going to arrive at a value. But in most cases, it's a lot more complicated than that, because you're talking to a buyer, you're talking to a procurement team, you're talking to the user, you're probably talking to a VP or a CEO or a CFO or someone. It's a lot more challenging when you basically say, hey, the price was generated by a computer and now it needs to go through these 8 different people who all have different opinions about price. So that's why, dynamic pricing and in itself, it can be as straightforward as just take it out of the box and let's start working on it. There's a lot of work that needs to be done. There's a lot of massaging of that messaging that needs to be done before those price gets communicated. And I think that's where the human element cannot be ignored, what Rob said. So that's something we just can't ignore in pricing.
Yeah.
And that's where most pricing teams sort of fall apart, when they ignore that human element.
Yeah. So sales cycles get longer, and the pricing or the purchasing process gets more complex, more stakeholders involved. That it's harder to have, prices without, or different levels of justification you need, et cetera. Very insightful. We'll move on to the next question. Let's see. Next on our list, Karan, it's your turn to choose our next category.
Yeah. These movies are just great, all of them. But I'm just gonna choose, I guess, The Sixth Sense. I love that movie as well. So why don't we go with that one?
Go with The Sixth Sense. All right. As executives head into 2024 planning meetings, their agendas are packed with discussions on budgets, KPIs, sales cycles, product roadmaps. However, pricing, a critical aspect that influences all these areas, often remains overlooked, primarily due to a lack of awareness on what to look for. In your experience, what is the most crucial aspect or indicator to examine when determining if a company has a problem with its pricing?
Yeah, no, that's a great question. I think we come across that almost every day in different discussions. I think there's ways to arrive at that. I think if you have the number one place I think where you can look at if you have a pricing problem is to look at your discounting. If your discount year over year just keeps on increasing, the discount rate keeps on increasing, not the dollar value, but the dollar value will scale with your revenue. But if you're going from 15% discount to 18 to 22 to 25 to 30, and you're seeing that more and more of your deals are getting heavy with discounting, this means there's an issue somewhere. Either the issue is in your value or either the issue is in your price. Sometimes it could be that you are just not communicating the value right. So that's why you have to go back to discounting as a crowd. But I think discounting is a great place to start. On top of it, you can also look at other places like churn. If you're seeing customer churning at too fast a rate, then you obviously need to figure out churn is good. But I think there are certain kind of customers that will always churn. The price sensitive customers will always churn, and let them go. Don't even worry about keeping them back. But the people who are your ideal customers, who are good value and good paying customers, when they start to churn is when you start to look at what exactly is happening here, and is it a price driven issue or not. And then so you start discounting, you look at churn, and the third place, I think, if you're in SaaS, if you're in B2B SaaS, and you have a good, better, best portfolio, and if you are seeing more and more people gravitate towards one bucket, like everyone's moving towards the good, this will mean you have a pricing issue somewhere or a fence issue somewhere where too many people are going for the good because either the value is too much or the price is too low. So I think there's no one sign. I don't think so there's one sign. There's going to be too many different things that you would have to look at and basically say, hey, I have a pricing problem. Either it's a renewal problem, either it's a discounting problem, it's a churn problem, or it's just basically people and how they are aggregating towards what product in your portfolio. I think that will all inform you on that decision. There's no one. I don't think so we'll be able to arrive on one. Like that's the foremost. So it's a bunch of things that you need to look at.
We have contestant revolt. Refuse to select one. That's fine though. All right, Stephen, you're up next.
So I agree with Karan that the order that you look at this stuff is discounting, because if you've got a discounting problem, any price changes you make is just pouring water into a leaky bucket. That churn, but beyond churn, all of the 6 factors that determine your net revenue retention, you need to understand your trends there and see if those need to be addressed. And rebalancing packages and asking, does this package still do the job it was meant to do? That for sure is something that we should always be looking at. But I think there's something that comes before all that, which is, are my pricing goals aligned with the overall business strategy? And to just take a sort of an example from the consumer space, if you have a premium brand, what does discounting do to you? So you have to make sure pricing does not drive the business. Pricing has to be aligned with and supporting the business's larger overall goals.
Agreed. Rob?
Yeah, so these guys both mentioned kind of the 2 big things that I would look at. That, like, when I see this question, I think of 2 things. I think of like, where would I look and who would I talk to? And the first place that I would go is talking to sales. I would talk to the sales team and see what their conversations are like and what customers and prospects are saying in their sales conversations. I think all the sharp pricing people that I talk to that are working at established SaaS companies have a direct line to sales and are talking to them all the time. As far as like a metric, I like looking at, I think Steven mentioned net revenue retention. I love looking at that because I think it tells you if you have a model that'll grow as your customers grow. And I always think back to HubSpot, which is one of my favorite examples because I've spent a lot of time working there. But back in the day, they had a flat rate pricing model and we're going after SMBs, and SMBs obviously churn pretty quickly compared to enterprises. So they had a big churn problem, and they ultimately changed to a 2-axis model where they added a usage component to that and very quickly kind of reconciled that issue. So I think that's the first metric that I would start with. But if you're looking for who to talk to, I would definitely talk to the sales team and start that conversation.
Fantastic. Alex?
Yeah, no, not really any differences here. I would say that for me, it's you look at acquisition and you look at retention, right? And that's where you'll kind of get a sense of pricing. But if I had to pick one, I would probably pick the retention side. And that's mostly because even if your pricing sucks, a really good sales team can overcome that, right? They can charm people into buying products, even if the price isn't perfectly aligned. But what will happen is when rubber hits the road and you're actually now paying for the thing and you're not getting the value out of it, customers will churn. So in my mind, if I have to pick one direction, it'll be on the retention side, because that'll tell me that we're acquiring a bunch of customers, but they're all churning. So assuming our product isn't absolutely horrible, the value alignment is not there with what people are paying for. And so that to me is, if I have to pick one, which I will agree with everyone, there are a lot of different symptoms that you will see throughout an org if your pricing isn't right. And it's not like a one kind of thing fits it all. But if I have to pick one, it would probably be on the retention side.
Oh my God. I love that answer so much, because for those who don't know, I did focus on helping companies with retention for a while. And I basically got so tired of fixing their pricing problems, because it was always ended up being a pricing problem, that I was like, all right, we're just going to go straight at it and I'll help you with pricing problems, because this is the actually fix for your retention. So I love that, Alex. All right. Next topic. I'm also going to give a 7-minute warning. So this may be the last topic that we get to pick. Let me clear the banner here. And let's see, Stephen, it is back on you to pick the topic. And given that we have limited time, if everyone wants to truncate their answers, that would be appreciated.
Clash of the Titans.
Clash of the Titans. We're on the executive leadership team at a B2B company. The company has no explicit pricing function or ownership, but you know there's a problem. When pricing gets brought up, tempers flare, opinions are stated as fact, but nothing changes. As an executive in a company lacking an explicit pricing function or ownership, what would be your first steps to address and resolve recurring pricing issues?
Succinct answer. Okay. Two things. Get people to agree on the data that matters. So have delegate someone to organize the relevant data and put it into a digestible format. And secondly, switch your mode of thinking to scenario planning, where you consider different possible futures. The future is not fixed. And I think it's really critical, especially at the strategic level, to know that different futures could happen and pricing needs to be different in different futures. And I found that when you shift the conversation to strategic planning, to scenario planning, you can really you can diffuse a lot of these head-on collisions and get much better conversations happening.
Love it. Rob.
Yeah, I think my approach here would be kind of two things. Steven kind of mentioned one of them. I think the first thing that I would try to do is put together a pricing committee, but actually give it a leader, like have somebody driving it. I've seen a lot of committees where nobody's actually driving the bus and everything always ends up falling flat. You have to give somebody accountability there to really kind of lead the charge. So that'd be the first thing. I think the other thing is having shared definitions and consistent definitions for what the problem is, what you're actually trying to optimize for, and what you ultimately want to get out of it. Because I think especially in SaaS and in the world of acronyms, it's incredibly easy to lose sight of like what somebody actually means when they say something, especially if you're working cross-functionally.
Fantastic. I love it. Alex.
Yeah, empower. Like I've seen so many deaths by committee, so could not agree more. Like someone needs to be empowered to have the authority to make a decision on pricing. And then to Steven's point, like you need to have the right analytical structure and foundation set up. You need to know what data to be looking at. What are the insights that you need to glean from that? What are the decisions to be made there? Get the right stakeholders involved, and then have someone who can actually make decisions off of all of that. So until you have some version of that structure set up, not a whole lot of change is going to be able to happen. You're going to talk about it a lot. People are going to get really pissed off, but nothing's going to change.
Alex, can I just send it back to you real quick? So people have set up a committee, but where it dies is that they didn't delegate a specific person with decision-making authority.
Yeah, it happens all the time. You have like, let's get someone from product, from sales, from marketing, from finance, and you have all these like mid to senior leaders in a room, and maybe you even have a few executives on it. but the executives are too far removed to be in the weeds. So they're relying on the rest of the committee to make a decision. The committee goes back and forth. Everyone, understandably, has their own agenda that they're bringing to the table. And so no concrete decisions get made. And a lot of times decisions just get punted for, well, let's wait until we do this bit of research, or let's wait until this new launch, or let's wait. And so you wind up having a decision that could be made on the day take a quarter. And that's because no one's at the end of the day accountable and responsible for actually pushing a decision through and kind of cutting through the noise. And sometimes that is just the CEO is part of that committee and they're the ultimate decision maker. But you have to have someone who is going to say, this is what we're doing. And I'm okay being accountable for whatever happens next.
Got it. Karan.
I hate pricing committees. I don't think they add enough value. If we have a pricing committee, then we should have a finance committee, and then we should have a product committee, and then we should have an accounting committee, because they're all the same, right? So I think I see the value in having authority. I think pricing suffers when it's someone's 20% of their job instead of 80% of someone's job. When product whose main focus is products start dabbling into pricing, which is 20% of the job, maybe 10% of the job, then monetization suffers because they're trained on product. They're not trained on pricing models. They're not trained upon what good sound pricing design is. But that's why you need a true person. If you're having a recurring pricing issue, the first thing you should do is get a pricing person, get a monetization person in. Or even if you want to use someone from your company, use someone whose 80% of the role now is monetization and pricing. So they can actually work on, because it's one thing to say analysis and data. There's another thing to say that it takes 7 days to clean up a data set to get it in a format that people can start to make meaningful analysis out of. And it's not someone's part-time job, it's someone's full-time job. And that's where I think we need a standalone pricing function with authority, and committees don't help. So it just creates more noise and nuance because everyone's becomes a Zen as soon as they're in the committee. So that's my opinion there.
Oh, I love that. Well, yeah, everyone, I think one thing I learned or took away from this is that pricing does have a lot of nuance. So if you are confused by B2B pricing, it's not because you're dumb. It's because there's so many corner cases to this. Audience, throw in your poll who you think did the best. It doesn't matter. Everyone's a winner. Contestants, fantastic job in today's session. Thank you so much for your participation. Audience, thank you for all of your comments and questions and for spending your time with us today. If you have registered, you will get a recording of this webinar. And hopefully, if there's enough interest, we will do this in the future, because obviously we did not solve everyone's pricing questions in the only 60 minutes we had today. Thank you, everyone. That will conclude today's session.
Thank you very much.